Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Robinhood, ticker symbol HOOD. And so here we are looking at the daily chart on Thursday, May 16th, after the market has closed, and Hood closed at a price of $17.90, being down 3.35% on the day, but going up a little bit to around $18 a share in the after hours. And so, yeah, I did want to go over this chart because they did just recently report earnings on the 8th. And I do think there are some pretty cool levels that I have not yet drawn up that I do think could be suggesting that the price will be going higher. But if there is a pullback, it will be higher than any of these levels that I have drawn here. And so I did want to go over some of these briefly. Really, all of these blue lines are some gaps to the downside. I don't necessarily think they're going to get filled. And also in the past, I did cover this red line as it did seem like it was key support in the past. And there was this break below it, and I thought price would be going lower, getting rejected from that level, but I was wrong. That does seem like it was a pretty important one, and this was actually a great dip buying opportunity. And so I did miss that, but I do think that looking at historical trend lines like this could provide some insight for where the price may be finding support in the future. And so there is another line I'll draw in just a minute that is similar to this one, but it is much higher, and I do think it's pretty cool, so I'll go over that shortly. But first, I did want to go over this uptrending line because it does seem like, it could be potentially acting as support. I view as like a worst case scenario. I don't think it's going to get lower than that line. And so this line is based on these two lows pretty close together over here, the low of December 8th as well as December 13th. And so that is how you draw that line. Does look like there was a little bit of a head and shoulders pattern here and a break below it. But, like many opportunities, when there are dips, those are the great opportunities. And this was another one here before that moves to the upside. And so, I did want to, really just do a couple things here with the chart. One is a Fibonacci retracement, which I will do here going from the low, just being approximate, not doing it to the penny, but going from the low here up to the high. And so from that, it does look like on the pullback, the price was able to find support around the 382. That is at a price of $16.57. And from that, price has really been struggling with getting above the 236 at a price of right around $18.20. And we have been, really kind of bouncing around that level. And so on earnings, one of the things that I noticed, and that was on this day or the following day, was this big red candle. Big move to the upside, but then ultimately a bearish engulfing candle followed by a continuation to the downside the next day. One of the things that stood out to me before earnings was on this day here, May 6th, we saw a wick high up to $18.46, being higher than the high that was hit on April 29th, which was at $18.29. But we could not get any closes above that level. So that seemed to me like it was showing some signs of weakness, that there might be a pullback following earnings. And I initially thought I was wrong with this big move to the upside, but then we did end up seeing a pullback. Like the pullbacks of the past, I think this was a great dip buying opportunity because this level that I had mentioned that we could not close above just yesterday, not only do we get a close above the high from April 29th, we also got a close above the high from May 6th. And so that was closing yesterday at a price of $18.52. So I do think that does suggest that there is some strength in the stock. However, it would be good to be getting multiple closes above that and getting closes higher than the highs that we're putting in. So we do still need to be getting above today's high, closing above it, which is 1924, and the high from the day after earnings on the 9th, which was at a price of $19.47. So next week, I will start to look for closes above that level. I do think that would act as pretty good support as there was some consolidation here. And so that could be, the next level to be reclaiming before attempting to get above $20 or really this high here, hit on March 27th, which is at a price of $20.55. But before I point out where this yellow line originates from, I did want to do this uptrending level that I think is pretty neat. And so I'm just going to take a step back here so we have this full red uptrend in frame. And so I'm just going to take the ray tool, connect from this pivot point on that line, and then connect to the highs over here. And two things very cool about this trend line. One is that it looks like it was tested as support when we did break a little bit below that 382. And another thing that's really cool about it is it does look like it is parallel to this white uptrend that I have drawn here. So I do think that could potentially be pretty significant. And actually, if I were to draw a parallel channel here, because I just realized as recording this is an edit, that there is a pretty cool parallel channel that could be suggesting, a pattern that we might want to be paying attention to. And so I'm just going to connect from this pivot point here from that red trend line, one pivot point there, and then up to the highs over here, hit around the end of the year, and then connect the top pivot point to the highs right around here. Really just being kind of approximate. This is a little bit rough, but so from that, it looks like the base of that parallel channel is parallel with this white uptrend that I have drawn just below it. And then the top of that parallel channel does look like price has been testing that as resistance. And so maybe we'll be seeing a break above that channel, or perhaps testing it right around $20.58 at the confluence of that level, the top over here, and that parallel channel. And on that note, that might be notable resistance, because not only would it be coming into this level, this yellow level, also coming into that channel, also potentially forming a double top. And so if price does get up to $20.50, right around there, I could see a retrace from that to test the base of this channel, and that would coincide with testing the 236 before the next leg up and breaking above $20.50. And so that yellow line does originate from a point in the past where we did have a little bit of consolidation. So I'm just going to zoom in over here. And so that is based on the low from December 6th of 2021. A little bit of consolidation there. I do think that consolidation is going to be resistance. But then from that, we can look at levels to the upside that there was consolidation. So over here, I could see an upwards target of $26, $27 if we do break above 2050, maybe pull back, test that as support, and then move up to $26 or $27. A little bit more consolidation over here, that would be bringing price to right around $34. So maybe that is the next level. And that does seem to correspond with prices that were hit right after listing. So $34, I think, does seem like a pretty reasonable target for maybe the summer months or into the fall. But if we do get to that price, if we do break above $20.50, we might bump our heads at either $26, $27, or $34 and maybe pull back to test this level then as support before going higher. So that is what I would look for. And those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.